to the Momentum Options Trading channel, where we're all about helping you become a smarter and more successful trader. My name is Eric, and I'm the founder and creator of the Momentum Options Trading System, and in today's video, we're diving into the exciting world of day trading options. So whether you're a seasoned investor or just starting out, options trading can offer tremendous opportunities, but it's important to have a solid strategy and understanding of the market. That's why I put together this video for 5 tips of day trading options profitably. And I'll be sharing practical insights, expert advice, and actionable tips that can actually help you make a real difference in your trading journey. So let's get started. Number 1, trade with strength. Whenever you're trading, day trading options especially, you want to make sure that you're trading with trends across time frames. That way, the time frames, or the trends from higher time frames can carry your trade, which you're executing on a lower time frame, into profits. Because over a longer period of time, it's expected to move in your direction versus just a 5-minute or lower time frame where you expect it'll move in the next, say, 5, 15, 30 minutes in your direction. If you are trading with stocks that are moving in your direction over multiple consecutive time frames, then it'll be even more easy to navigate your trade, to enter into a trade that is likely to continue in your direction over time. Number 2, trade highly liquid assets with highly liquid options. Whenever you're entering into an options trade, it's very important that it's very easy to get in and out of that trade. You want to make sure there's going to be a buyer when you're looking to take profit, or there's going to be a seller when you're looking to enter. If not, you're likely to experience a wider bid-ask spread. A wider bid-ask spread means that you are not going to be able to the maximum of your ability, capitalize on the price action. The reason for this is because when you go to buy, you're going to have trouble making the deal. Maybe you want to buy an option for $200, but they're going to ask for $300. And the middle point is $50 between what either of you think is the fair deal. If you're trading something more liquid, you might find the difference is you offer $200, they ask $210. So you meet in the middle at $205. So when you're getting in, you're going to get a better deal. And when you get out, if you're trying to sell at $400, they might only offer you $350 and on a lower liquid option. And if you have to meet in the middle, you're only going to be able to take profit of $375. You're going to exit at $375. But if you have something with a tighter bid-ask spread, something that's much more liquid, maybe instead of selling at $375, you get out at $395 per option. And that's a $20 difference. That is a considerable amount of profit that you're going to be leaving on the table. And don't forget, if you got in with a bad price and you get out with a bad price, you're losing on both ends. So make sure that you trade highly liquid assets with highly liquid options. That's how you're going to get the best deal. Number 3. Whenever you're day trading options, it's very important that you keep a tight stop loss. Whenever we're day trading options, we're trying to capitalize on the very fine intraday movements of price. We're trying to capitalize on those trends that might be strong across time frames so that they carry us into our profits. But we want to make sure that once that trend is not working in our favor, once the trade, our option is not making us money anymore, we want to close it and lock in our gains. Whenever we're day trading options, these near-dated options are going to have a higher theta risk and also have a stronger delta-gamma relationship, meaning that they're going to make and lose money faster per $1 change of the underlying asset. So whenever we're day trading options, we want to make sure our stop loss is very tight so that way we don't let the trade get away from us. We lock in our profits when we have them, and we never let our winners turn into losers. Number 4, buy in the money or at the money options and try to trade stocks in a specific dollar range. For example, I tend to like to trade stocks between about $100 and $200, and I try to target options that are between $1 and $2 in value. Never trading options that are lower than 30 delta. We never want to trade options lower than 30 delta because these options are very unlikely to have any value at expiration, and we'll be fighting the IV and theta risk the entire time we're trying to profit from our trade. Number 5, don't trade 0 days till expiration options. These options have the greatest risk to theta, gamma, and IV. These options are constantly in a battle against time to try to be profitable. If these options move in the wrong direction, even for only a candle, you can have a great change in their value that is very hard to recover from, even if price starts moving back in your favor later, especially if you're trading out of the money options. This goes back to rule number 4. We don't want to trade options below 30 delta, and we definitely don't want to trade options that expire today. I hope you guys enjoyed today's lesson and got value from our 5 tips. If you have any questions, please comment below, and don't forget to like and subscribe for more content.